below the 20 exponential moving average, but Ethereum is at the bottom of this downwards trending channel, potentially looking for strong support to finally make that strong push to the upside. I'm also going to go over the latest in the crypto news, so make sure to stay tuned until the end of the video. Smash a like, smash the subscribe, tap that notification bell, and leave a comment if you're enjoying these crypto videos. Make sure to check out my trading masterclass. It's currently priced at 50% off in this video description. Let's begin with Ethereum on the daily time frame. You can see in the last few days, we've made a really strong downwards rejection. Actually, in this area, we'll scroll in a minute, but we've actually made a form of a symmetrical triangle, also a form of a trading range. And what we do expect is continuation in the trend direction. The current trend is to the downside, and we have got that continuation of the downtrend. One thing that I do want to point out is actually when we look to the left, and all we do is actually combine these 2 points here. We draw a trend line from this low all the way to this low, and then we basically just extend out the price into the future. You can see what's actually happening. We've had price come into this area before and act as a support zone, and look at what happened to price in the most recent big rejection to the downside. We literally perfectly touched this downwards trending trend line, and we've now made a push up. We made over a 10% push up, and now looks like we're potentially coming back to retest it one more time. But this is definitely a strong support zone. Every time we've come into this area, it looks like we've wanted to have a lot of buyers. So if we are going to see a massive rejection to the downside when we scroll out potentially to these lower prices in this $1,200 region, we'd clearly need to get a break below this type of trendline trading strategy. So overall, this would be a good place to put some stop levels if we get breaks below. But overall, in this market, still looking for more downwards momentum. I don't think it's over just yet, but I do think it will be over soon. Reason being is when we scroll out and we look at this longer term time frame, we've still been in a long-term uptrend. We've obviously broken below this exponential moving average as of recently, and we've broken below this trend line. We've also taken a lot of stops in this area. Reason being is a lot of people would have had actual stops right here in this area. They would have put their stop. People being stopped out of their position. But overall, when we actually grab the Fibonacci extension and we go from this bottom, the Fibonacci retracement, and bring it all the way to the top, and actually see some of the prices that we're retracing. A 50% retracement is extremely common in the market. If you look at Forex, you look at stocks, you look at cryptocurrency, if you look and a price and an asset actually makes a move to the upside, it's very common to then retrace roughly 50% of that price and then continue on in the trend to the upside. And you can see where price just nearly hit, coming up to this 0.5 Fibonacci retracement level. And it would make a lot of sense to come to this 0.5 and 618. And if it does, it would still be in a long-term uptrend. Overall, we've had some really strong momentum in this region here. It's obviously been a bit of sell-off with some of the latest in the Tesla news, but overall, still long-term bullish. We haven't even retraced 50% of this long-term push, so you can't just be bearish. Obviously, overall, since this EMA has begun to tick to the downside, all in this area, it was sloping to the upside, we're now sloping to the downside. It just shows that at least in the short term, there's at least going to be more downwards momentum than long-term momentum in this area. The last thing I just want to point out is price is basically stuck in a trading range. You can see that we failed to break to the upside in this area, and now we're actually failing to break to the downside. So what I do expect is sideways trading price action, where price basically bounces between these two areas. What it will allow the EMA to do, it will allow the EMA to actually go sideways in this area, eventually catch up. As it's been a long uptrend, it will catch up, go sideways, and then what I do expect is a continuation of the trend. Once you get this big strong move to the upside, makes sense to have a bit of a sideways to down momentum, and then you get that continuation of the trend. The reason being is we're on the weekly time frame. We need to be looking at what's going to happen over the next few months, not over the next few days. If we flick over to the 5-minute time frame, you can see the chart is just absolutely crazy. I used to love trading the 5-minute chart, but it's just so extremely choppy, and it's nearly impossible to be a really consistently profitable trader. I would prefer to trade something like the 4-hour where I can increase my probability. I can also increase my risk to reward because I'm looking for large gains. On the 5-minute chart, you're trying to find 1%, 2%. On this 4-hour chart, you can see some massive swings that the price has had from top to bottom, over 18%. So you can look for those 5%, 10% moves. Now let's go over some of the latest in the crypto news. Bitcoin's massive bull run is about to begin. So let's actually look at what's happening in this 2013 region. We had a triangle forming really early in the trend. Then we had that massive explosion to the upside. We then had a very similar wedge to triangle pattern forming, got a big breakout, retest of the apex, which I'm teaching all the time, and then got that massive explosion to the upside. Exactly the same here. Symmetrical triangle, break to the upside, apex retest, massive break to the upside. You can actually see the triangle that's currently forming in this area. We're currently forming a triangle. We're right at this bottom area of the triangle looking for a push to the upside. You can see what actually they have actually done in the price. They've actually come over to the weekly time frame, and what they're actually extending is they're actually looking to extend from here to here, but they're actually probably using a slightly different chart and a more longer term time frame chart. So right here, we're right in this triangle, we're right near that apex point, and it's just showing that you look in the past, every single time right before the bull run, we've had this triangle type of pattern looking like what's going to happen in the future. All you can do is look at what happened in the past, look at what potential in the future, weigh up the probabilities, put the right risk to reward on the trade, and then go for the trade. That's all you can do. You never have a 100% probability of success. So even when you're flipping heads and tails coin, you'd have a 50% chance of winning, 50% chance of losing. But you can easily go on a down streak of 8 or an up streak of 8. You might win 8 in a row and think your strategy is 100% perfect, absolutely crushing the market. Then all of a sudden, you got 8 losses in a row. It is extremely common. It's not guaranteed, but it's very extremely common. The more that you trade, it's guaranteed that you are going to come across something like 4 to 8 losses in a row, and you need to be able to withstand that. If you're risking 30% on every single trade of your trading portfolio, all of a sudden 2 to 3 trades, loss, even at a 50-50 win rate, bam, you're out of the trade. And that's why you only want to risk 1 to 3% maximum. Reason being is you can easily have strings of 8 losses in a row. I'm always teaching that in my trading course, maximum losing 9% per month. Once you've lost 9% per month, you're then not allowed to trade. You have to move over to the next month. You're only paper trading and things like that. There's so many different strategies that you can implement. Trading is a hard game. It's not the easiest game out there. So you need to make things as easy as possible for you and actually simplify what's going on. Altcoins, can't be bearish on altcoins. Why? The last 3 times that Bitcoin dominance touched the EMA 200 line and broke to the upside a short time later, we saw an alt season. What do we do now? A touch of the 200 EMA and an uptrend is broken. So very, very similar here. We had this uptrend, we're touching this 200 EMA, and then we got this massive downtrend in the market. And what this is actually looking at is it's looking at Bitcoin dominance. So when this Bitcoin dominance is much, much higher, and then we get a sell-off in Bitcoin dominance, it means people are selling out of Bitcoin and they're buying into these altcoins. So a sell-off in this area of Bitcoin dominance actually is an altcoin season. Reason being is people buying out of Bitcoin, buying into altcoins. The Bitcoin dominance is decreasing because less people are in Bitcoin, more people are in altcoins. And you can see, so what's actually happening here, we have a retest of this blue line. We've got these multiple alt seasons back in this area, and it looks like potentially we look to the left, see what's happening. We also have this trend line trading strategy that has finally broken to the downside. Once you get that really strong close below the trend line, you have to get out of your position. That is the full strategy. Again, everything's in my trading course. So make sure you truly understand what's going on and your position in the correct way. Smash the like, smash the subscribe, leave a comment, and tap that notification bell. If you'd like to continue watching my YouTube videos, click the video that's on your screen right now.